Good afternoon, people. Good afternoon, people. US session just open, and today I want to talk to you about central bank divergence. Now, the reason for this video is, guys, I'm trying to point out, because you must remember now we're in the growth stage of the economy. Yeah, we're not just looking at technical analysis. We're looking at macro data, and we're looking at central bank divergence, and that is what is going to make a catalyst for a strong and a weak currency, guys. So the central bank divergence are going to be more like swing trade ideas, guys. Yeah, and if they are correct, we can intraday off that, or we can swing trade off those ideas on the back of that. So let's start with the Federal Reserve, the most important central bank in the world. And what I want to say is, guys, it is clear, because remember at the end of last year, there was a bit of confusion whether who's going to be the Reserve, Euro, or the Fed. And now with the macro data coming back, it's very clear the Fed has gone, has overtaken the battle of the Titans, should we call it. And also as well, the Fed has gone a lot more neutral rather than dovish as well. The last meeting was a bit dovish, yes, but on the whole, we're a lot more neutral. Now, the Fed has got a slight issue as they are in a huge growth cycle, but the rising yield prices are going to hurt the stock market. And also, it shows the market that the inflation worries are back. Because the problem is, if the bonds are selling off this quickly, the Fed's going to have to try and buy back these selling off bonds back with their profit, and it's going to cause some major disruption. It's a very similar issue that's happening with the RBNZ as well. But I'll talk about that a bit later on in the video. But the Fed in the last meeting is trying to be as dovish as possible to try and stop the de-acceleration and the bullishness of the bond yield prices, as I just said, guys. So, talking about this one here, guys. So, this is the central bank divergence video, guys. The Fed is actually a little bit more neutral and dovish. They aren't as dovish as the ECB, but they're still a little more dovish and neutral. So I'm not going to use this as a prime example as a swing trade idea, guys, because this and the DXY itself was still, there's nothing too much to diverge, if you know what I mean. I mean, on the long term, yes, I can see the dollar going up big time, yes, but the central bank, to me, is still a little bit dovish. So I'm not going to talk too much about this. But what we are going to talk about next is the pound, the Bank of England. Now, the Bank of England is, to me, is hawkish. And we're going to talk about that right now. So the pound went from, so let me get the pound yields up as well. Where is GU? 2-year yields. Let's get the two years up now, guys. So the pound went from talking very, very dovish, we're talking about negative rates, now to raising growth expectations and stability, guys. So the pound went from very dovish to neutral and even hints of hawkishness. This is what we're looking for in the divergence. We're looking for a really strong central bank. Well, as strong as we're going to get, as hawkish as we're going to get, and then we're looking for a very, very dovish central bank. That's where we're going to find our divergence, guys. And I've got a few here for you to show you guys. So, pound is one of my most hawkish central banks at the minute. Another strong attribute is that they kept their 895 billion bond buying program exactly the same. They're targeting 2% inflation, not trying to overshoot like the Fed and the RBNZ. And the bond yields are the highest price since 2019. They're in no rush for any tightening of policy, which is good because they don't want to scare the market. In the last budget review, furlough has been extended, and all the self-employed and business support schemes are all extended as well. And as we all know, the UK vaccination game, they are ahead of everyone. They are the strongest G10 currency in the vaccination. And they're not expecting any tightening until 2023, which is the best out of all the main central banks as well. So this, to me, guys, is a very, very strong central bank, guys. And it's the strongest out of the G10 currencies, guys. So for me, the most hawkish is going to be, the pound central bank, the Bank of England. And if we see on a monthly and a weekly, we are wanting to break out, guys. We are wanting to break out big time. So a nice big swing trade there, not really against the US dollar because they're both quite hawkish. the dollar is a little bit weaker, but we want something that's the total opposite, and we'll go into that in a minute. Let's just get out all the names of the central banks first. So we've got the Fed, which is more neutral. We've got the Bank of England, which is neutral but slightly hawkish, which makes all the difference. Next, we've got the ECB, which is very dovish. So next, we have the ECB, which is the largest central bank with 8.6 trillion in assets. Now, the ECB have actually introduced a new bond buying scheme to try and drop the yield price, which is basically a form of de-evaluation, guys. Buying an enormous amount of debt to drop the yield price. This scheme is a PEP program, guys. You would have already heard the PEP program, which is the Pandemic Emergency Purchasing Program scheme, but they've extended it and they're actually buying more bonds. They promised to buy over 70% of all EU government bonds and are willing to buy more, which is absolutely crazy. Now, another horrendous fact about the ECB is the ECB has the biggest balance sheet in the world of junk assets, which is really scary because everyone knows the Fed is buying a lot of junk, but the ECB is actually buying more, which is just crazy. Now, if you compare them to the Fed as well, the Fed has a lot of catching up to do, really. Because we all know the end game. The end game is pure currency devaluation, to bond buying, to the roar in the face. That is the end scheme. But for now, we can find swing trades, guys. We can find ideas of whose central bank is going to be stronger with the central bank divergence, guys. And another thing that I want to add as well, guys, in terms of GDP percentage, the ECB are actually behind Japan. Over 60% of their GDP is on their balance sheet. And that is nowhere near over, guys. So it's very, very, very scary. So far, guys, let's get Euro Pound up. Now, as we've already seen a very big move already in the Euro GBP move. I expect to see a big pullback before another move down. The move has already started, actually. Expect price to maybe come up to here, maybe just come up to the top of this range here before coming back down. This is another big central bank divergence. The pound, the Bank of England, and the ECB. Very, very, very big divergence. I expect a lot more further declines. The first target is going to be here, 83, then it's 77, then even potentially 72, guys. So this is another poor example of a central bank divergence here, guys. We've already seen a ridiculous move, already seen that, because this starts of the divergence happened ages ago, probably happened at the start of the year. So this move makes sense. It makes sense. Next, we have the Bank of Japan, who are infamously known for their large debt. The last meeting left rates unchanged at minus 0.10. They have targeted their 10-year yield with 0.25 with a range of 0.2 on either side. So that allows them just to get briefly negative and they're slightly positive on the other side of that. They will facilitate lending incentives if they cut rates. They've scrapped the ETF buying scheme, which is seen as slightly hawkish. They've also spoken about potential rate cuts. So on the whole, the Bank of Japan is dovish. Not as dovish as the ECB, but still dovish. But then again, you must remember the Bank of Japan has a slightly different way of doing things than the ECB. They need their rates down 24/7 because you must remember a weak JVP and with the economic state of the world, this will help the growth cycle big time. Don't forget the yen is seen as a risk-off currency anyway. And in a boom cycle, we're going to see this sell-off regardless. So in a boom cycle, the yen will already be weak regardless. So in a boom cycle, the Bank of Japan haven't got too much to do, to be honest. Not too much. To ease off slightly because their currency is already going to be getting sold extremely hard because they only do well in a risk-off environment. And in a growth stage, it's the complete opposite. So let that sink in, guys. Now, RBA. RBA is also dovish. And this is quite a big one for the RBA as well. So I want to talk about this. So in the last meeting, they spoke about the depreciating FX price, which is due to declining trade, end of mining boom, easing in domestic monetary policy, and recent introduction to QE. Now, RBA aiming for a 2 to 3% target inflation. Now, they've actually gone for the overshot to 3, which to me is very dovish, especially when every other central bank is going for the 2. The Fed is going for a slight overshoot. I think it's only 2.5. So this on an inflation stand is pretty dovish. Nothing expected to change before 2024, which is another bearish indicator. They are highly considering extending their bond purchasing program as well. So guys, to me, this is very, very dovish, especially from a bank that's not known for being dovish as well. So to me, pound or is going to be a fantastic swing trade, pound to the upside, just because of their central bank divergence. And also look at price action as well. We've got a nice bottoming pattern here, so I can expect some buying power in. In this level we're actually in right now. Or even if we do overshoot, maybe this level here. But I mean, guys, to be honest, I expect the pound across most currencies to be very, very, very bullish. We can see the same on. Even on the CAD chart looks good. I know, but we've been in multi-year range with GP cash. Not too keen on that. The Swiss franc, we've already seen that first leg up higher. Yen, absolutely gone. Now, RBNZ is a slightly different. They've actually gone for a little bit of a bit of a Fed approach, which I'll talk to you about right now. So, sorry, 2 seconds, guys, 2 seconds. All right, guys, apologies about that. So the RBNZ guys is going for a very similar approach to the Fed, where basically their economy is booming, but their bond yield prices are absolutely soaring. So to not scare the markets, they're being quite dovish, even though their economy is quite strong, which I quite like. So the Fed and RBNZ are pretty similar. So I wouldn't really be going against them because their economy is actually strong. They're just being dovish to try to control their bond yields. So I wouldn't really try to go against them, but they're not as strong central bank wise as the pound, if that makes sense, guys. But they've had fantastic. So New Zealand have had fantastic macro data coming back, showing that they are back to their pre-pandemic levels. Even retail sales come back better than pre-COVID, which is fantastic. Only issues, they don't want to shock the market into a full hike cycle because due to the boom in the housing market and their inflation, they don't want to mess it all up, guys. We've seen a stability and even decrease in bond purchasing, which is really good. 1.4% inflation, which is so low and very strong. The mention of negative rates are mentioned, but they only mention that still to try to keep that dovish tone to their central bank meeting, guys. But this is another one I'm strong on. So this is how it goes for me. Strong is the Bank of England. The neutral / strong, which is just under the pound, is the US and the NZD. Odd is bearish. Euro's very bearish, and Bank of Japan is bearish, guys. So with those top three, with the bank, with the UK, NZ, and US against the bank, against the yen, Europe, and AUD, we could fish up some pairs here. So let's look at AUD NZD. We've been in a multi-year range. We're pretty much at the top of this range here. So regardless of that, guys, I could imagine price coming down here anyway, coming back down. This looks like a good setup regardless. Now we're backing up our principle off the central bank divergence. And all NZD will be a good one because where they're very similar economies, that show that divergence will show up a lot more than other things. Because guys, you must remember, a lot of these pairs, there'll be risk on or risk off pairs. So it won't just be the central bank divergence or their macro data, which will be showing them any sort of divergence. Let's do NZD JPY. Massive overshoot regardless. But yeah, guys, the main two I'm looking at, the main one for the divergence difference is the pound against euro. That's the biggest divergence. And as you can always see, the moves are already happening. But we haven't missed the move for now, but we've seen the big move. So we're waiting for a better price action. But I mean, for something right now, all NZD is looking good. Really good, guys. So I hope this has helped. Guys, I really hope this has helped. And let's smash it out. Let's smash this out, guys. So to finish off this video, the main difference is the three strongest, starting from the strongest: pound, Fed, and RBNZ. Lowest, starting from the lowest, is euro. Then it's Bank of Japan. Then it's AUD. Guys, take care. Let's smash it out.